All righty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hey, Bran, how's it going? You said, how you doing? You know what? It's Tuesday, and I have a crick in my neck. Other than that, and just trying to get out the yawns. I'm already on my third cup of coffee, and I still have the yawns. It's usually the third cup can kill that, but apparently not today. So we had some weaker inflation data, which obviously fed into a weaker dollar. And so now the cable is breaking this 139 level. This is the this is the wedge resistance. This should put 140 in view. Matter of fact, I think it was Brand in the chat room says, hey, I'm going to be on the lookout for some dollar false breakouts. And I'm like, yeah, but I'd like to see precious metals turn. Unless precious metals turn, I don't know if I'm going to be thinking that all that much. It'd be nice, but you got to be careful that that the dollar might have some further to go here. So Alex says, hey, Blake, good morning. Good morning, Alex. How are you? So now that we've got the cable up here, just realize we're breaking out of this wedge. So while we're above, and I'm just going to put this as support now, while we're above this level right here, you have to be bullish. But if we get back below, excuse me, I'm going to change that to red. We get back below 138.80, that's when it becomes a false breakout. So 138.80, 138.80. By the way, support is really right here. This is let's call it 138.40. So while we're above that, you have to imagine we're going to 140 now. Okay. And oh, wait, did I just put that in the wrong spot? I did. 138.40, 138.80, 140. And if you think I'm going to put it into bullish, no. But that doesn't mean that we can't. You have to be bullish intraday, but I'm not going to say that my bias has changed with the sterling at all, because it hasn't, right? Because we break back. Oh, did I write this 138.40? Dyslexia kicking in first thing in the morning. I'm not bullish, and I mean intraday it looks bullish, but you look at the sterling, we are still in a bigger range, right? So just keep that in mind. Okay, so euro getting a little bounce today, which makes sense. I mean, look at yesterday's hammer, right? I mean, we had this nice hammer yesterday, which, we're getting upside follow through, as you would expect. Question is, how far can we go? So this is a 4-hour chart. Let's do this really quick. High to low, wrong fib. High to low, 618. Previous support that might act as current resistance. So I'm gonna write 118.58, then 119.10. So 118.60, 118.60, and then 119.10. Guess what? We're still in range. So support today is going to be 117.70 period. Okay, that's support. Aussie. We are at flag resistance. Breakout is right here at 73.75. Support right now is 73.25. So let's write down 73.25, 73.75, then 74.20. Why 74.20 big? Don't make me angry. Why 74.20 big? Because if you guys don't recall, 74.20 is the big level right there, right? This is the false breakout, reversal, sell off, came back, retested it, held like a champ. That 74.20 is really pivotal, right? It's going to be pivotal on the way back up too. If we go back up, Kiwi. Uh-oh. 71. Remember, let me stop here with the Kiwi. You guys remember yesterday? I'm like, man, we are really, really by the way, how many of you guys are the Forex Flow people listening in? You know, I say Forex Flow, like you came over with Ryan and his group of folks. If you are, Bran, of course you are, Bran. Today, Ryan just wrote us. His son has been sick, so he's going to be dealing with his son. So, you know, between dentist and everything else. So, just letting you guys know. Okay. Going back to the Kiwi, what I was saying about he just wrote a message. That's why I just want to let you guys know that. They all, sorry, I'm just letting the chat room know. Ryan may be out most of the day. His son. Just FYI. Okay, just letting the chat room know. Okay, going back to what I was saying about the Kiwi. You remember yesterday, I was like, I'm really, really on the fence of flipping this from, you know, bullish to range to bullish. Look at the pullbacks for the Kiwi. That, I mean, it's shallow. We can't even get below the 24% retracement. I mean, if you're shorting the Kiwi, you have to imagine you are frustrated, right? Super frustrated if you're shorting the Kiwi right now. So just keep that in mind. I mean, you know, a break above 71.70. Let's even imagine where that goes. Let's do it like this, because we have to start thinking in terms of that, right? So above 71.70 is 72.11, which is the 78% retracement. So let's write those down. 71.70, 72, did I say 72.10? Yeah, basically 72.10, right? And obviously support is that 24% retracement at 70.85. So we can't even dip. I mean, like I said, if you're short the Kiwi, you are so frustrated. Like, it's like, dude, why am I even trading this thing? Right. That's what you got to be thinking right now. Canadian. I bought some Loonie a little bit ago. I might be a little early here, but yeah. Triangle support, perhaps. Okay. Something like this. So 125.80 is support. If you look on the daily chart, we could be at risk of slumping back towards 125.20, which is the 200-day moving average and this trend line. So I'm going to write down both because 125.80. Because I don't mind buying dips in the dollar Canadian. Personally, being close to all of this support, but it could slump further. I picked up some this morning at 126.19, right? I picked up a little bit and I don't mind buying more. Let's just put it this way. It's pretty light position right now. Hold on really quick. Okay. The one thing that I am a little skeptical about regarding the Canadian is crude is breaking higher. And that does worry me a little bit about the Canadian and Norway too. But here's the dollar CAD resistance. The resistance is going to be 126.70, right? 126.70. Keep it on range. Look at the damn Swissy. That is a wedge. Steve said there's a bigger triangle developing, which in his weekend analysis, Steve did analysis on the Swissy, but I think he was looking at this. Yeah. I mean, you can see the dollar Swiss. There's all sorts of resistance coming into play soon. Regardless, this is a wedge. So 92.40, 91.60, 60, 92.40, and it's range bound. Dollar Norway. So we finally pushed through that support, which, I still have to admit the US dollar Norwegian krona is holding up really well based on, based on a double top. Stocks are near all-time highs. We just had an election. Yeah, I mean, we could get to 851, but 873 is still key resistance, right? And this is the one where you have to say, okay, while we're below 873, you have to be bearish. 851 is possible, but I'm surprised it hasn't moved lower, faster, longer, stronger. Isn't that like a Justin Timberlake song?
Harder, stronger, faster was a Daft Punk song. You know that one?
Yeah. But isn't that like with I can hear it in my head, but it's Daft Punk with somebody else, right?
No, I don't think so. Anyway,
No,
it doesn't matter.
I love that
doesn't
song.
matter.
Yeah, it's great. It's a great jam. Okay, sorry. Hey, look, dollar MEX. 1980, 2003. 2003. And actually, you know what? We'll just mark down 20 because, I mean, that's 19. I mean, this is, hold on. Let's remove that. So the dollar MEX, I mean, I'm drawing this stuff, but does it really even matter for today? Probably not. 20. I mean, 1980, 20. Hey, Steve, Stelios.
I'm here.
Hey, can you, my dogs are starting to scratch at my door. Can you take over for just about 5 minutes, please? And then I'm going to
your dogs or the webinar?
No, can you please let my dogs out? That'd be great. Can you guys take over the webinar just for a couple minutes, and then I'll be right back to finish it up.
Absolutely, mate.
All right, thanks, guys.
You want to do it? Oh, you've taken it. No, you want me to do it, or are you taking over?
Up to you, Stelio. I have no problem either way.
The dog ate my homework. Yeah, Brad. That's funny.
Blake reverts back to to the old-fashioned excuses, right? I actually, I kid you not, I did have schoolmates that had tried that when we were in elementary school.
Yeah.
So, what do you think?
What do I think? Well, today the number was soft as we kind of predicted. It's I'm happy when it turns out as I predict, but obviously it doesn't happen all the time. But so stocks like it, metals like it, the dollar kind of is a little bit on the back foot, but overall it's like we said, you're going to have persistent inflation, but you're not going to have every print
Of course,
exceeding
it is a volatile
expectations.
data set.
Of course. So I think people might be, there were quite a few FX pairs which were right on the on resistance or support, and we're kind of, are we going to break? Are we not? Well, we're going back into the the recent trend, and equities bounced off support. Norway is the only one which is continuing basically now, and I think you're right. You have it there. It's breaking down.
Yeah, I'm adding more to my initial position if we close lower today. So I'm going to add another like third probably.
That's a good move. And you know what? I was short the euro Norway and dollar Norway, but I closed way too early. Still, it was a good trade, but man, I should have kept it. Anyway, it is what it is.
Hey guys, sorry about that. I just had to run out.
No worries.
And, can you guys hear me?
Yes.
Yeah, mate. People here say that you're using the old excuse. Dog ate my homework.
Yeah. No. Like so. There's a interesting dynamic in my house. We already have 3 dogs, and then my sister and her husband and son, my nephew, she's pregnant. She's pregnant again with another child on the way, and she's like almost 10 years younger than myself. For those of you that don't know, anyway, they were supposed to go to Hawaii in like 2 weeks, but they canceled their Hawaii trip because it was for her husband's 40th birthday. They canceled the trip because Hawaii reported that they're only taking COVID patients they're taking locals ahead of any travelers, right? So if you're traveling and you got COVID or some issue, the locals are going to get treated first before you have to wait in line. Well, she's in the medical industry. She's a nurse practitioner, but she's also pregnant. And so they didn't want to risk her having any type of complications.
Makes sense. I wouldn't risk it either.
Yeah. So they decided to go to, instead of Hawaii for like 10 days, they canceled their trip. They went to La Jolla, which is, San Diego, basically, which is a really nice town in San Diego. They went there for the last few days, but they dropped their dog off with us. They were going to drop their dog off with us anyway. So I got 4 dogs in the house. This dog is a pain in my Watusi, and it is like at my feet all the time. So it's this little dog. It's this little like Pomeranian thingamajigger. It's this little dog, and literally does not leave the bottom of my feet. Follows me everywhere like a shadow. Anyway. So I'm sitting here at the desk, and then what happens is I've got the door shut in my office. The dog's got to go out to the bathroom. It starts scraping the door. And then when it scrapes the door, the other dogs walk over to the door, and then they start scraping at the door on both sides of the door. And it's like, now everybody needs to go out. So that was it. So
nice.
Well, yeah, have fun. For anybody who wants to have 4 dogs, come sit in my house. Anyway, Steve, I can see your YouTube studio. It looks like you're.
I thought you had already taken.
No, but I will take it.
Back.
Here. No,
go ahead.
Yeah, I was like, hey, look at what you're doing. Cool. You're gonna have to cut that one out of editing.
CBA doing that. Sorry.
What's that?
CBA doing that.
Yeah. So you're gonna have to have that one cut out. Anyway, let's talk about finishing up this bias chart. And thank you guys for your patience. Looks like stocks just opened. Look at NASDAQ's at new highs. I don't know if it's a new highs, but it's ripping. Oh, it's just just moving higher. And it looks like we might.
What a surprise.
Oh,
Unbelievable.
look, inflation is going to be transitory, guys.
Yeah, yeah.
It
Sure
is.
thing.
It is. Fed's right. You're wrong.
Mm-hmm. I'm so
Yep.
much worried.
Here's okay. We talked about Norway making our way down. Here's a dollar max. Talked about dollar max, dollar yen. Okay, so let's talk about dollar yen. Still 109.60, 110.45. I don't think you should even touch it until you break out of there. That's it. Dollar index 92.30. We held it as support. I think we wrote that down yesterday, if I'm not mistaken. 92.30. That was yesterday when we wrote that down. Today's low has been 92.32. So I think that's probably safe to say that that's pretty important. You know, if you were just sitting there yesterday looking at the bias chart saying, hey, when it gets to 92.30, I want to be long dollar. Well, that's worked out for you. 92.85, big resistance. And I do believe if the 92.85 is a 50% retracement. We break above that, we should tag or at least test the upper end here. Yeah, then we go to 93.05. We got that. That's actually, I think, a risk. So, okay. Gold and silver. Steve and Stelios, you guys never got to watch, because you guys, I mean, I know you guys celebrate Christmas, but you probably didn't get like the US or American Rudolph the Red-Nosed Reindeer and all those old shows. You never saw those old shows, right?
Well, I know the song, but I haven't seen the show.
Oh
This is
man,
the
when I was
cartoon
when I was a
thing.
kid, they do the claymation show, the old 1970s Rudolph the Red-Nosed Reindeer.
No idea what you're talking about, but anyway, carry on.
There's an old song, Silver and Gold. Mm-hmm. Oh, dude, I'm gonna have to send it to you guys, and you're gonna have to watch it with your kids.
Okay.
Seriously. Do you guys do your DVDs work?
Oh yeah, absolutely. I have kids. I have a kid, so DVD working is important.
Yeah, but it's like because you're in Europe, we have different codes.
Yes, that is true.
Oh yeah, you're right. Regions. It's regions, right?
Yeah.
Region. Yeah. So like I can't send you a DVD.
It won't work. It won't
Damn.
work.
That's
you can change
bold.
code, you can change regions, but I think only twice or something like that.
That's BS.
Whatever.
All right. Anyway, because you gotta give it to those shows. Your kids have to watch those, especially while they're young. Okay. Since you guys, celebrate obviously Christmas, so you gotta 23. Doesn't matter. I'm just moving. Sorry, you guys are like, all right, Blake, speed it up. 35. Resistance still downtrend line. Here's the thing about silver and gold. They've really had very limited follow through, and I know I express this almost on a daily basis. I'm really worried about the underperformance of these precious metals, and so I know most of you guys aren't longer term. I'm just talking about near term. They are just really not performing too well.
They are,
and
yeah.
No, they're not. And like today, they should have ripped higher, a lot higher.
Well,
so
having said that, silver was down 1% and a bit before the number, so it has rallied off the lows. But you are right; they're underperforming, definitely.
They are, and so if you guys want to know when to buy the dollars, when these precious metals implode, if like we start breaking through 1770 in gold, you don't want to be short the dollar. This is key. That's key. Bitcoin, I'll be done with this in just a second. This is bull bear line, my opinion right now. After that spike. So while we're above that spike low, which you know, you guys know that this was really right here at 42. It's at 43,000 basically. I mean, I'm just going to give it a roundabout figure, but 43K is mucho importante for bulls. I think resistance, you know, it's interesting because let's do this. Let me move the chart over a little bit. The 38% retracement, right at it. So, I mean, I would give it all the way up to here. It's obviously been very pivotal in the past, but it's your 50% retracement. That's going to come in around 48K. I'm going to say that's probably going to be some good resistance today. We are range bound. And S&Ps are bullish wall above. We proved it yesterday. Or above that. Okay, hold on really quick. I took my dollar Canadian long off. I just scalped out.
Did we lose Blake?
Oh, sorry about that.
Oh, he's here.
Yeah, I'm sorry. I was talking and I muted it so you guys didn't hear like all the execution sounds on my computer.
Okay.
I just sold my dollar Canadian. I was long, so I just scalped out of it. So just letting you guys know. Where am I at? So S&P, sorry, last but not least, where's our resistance in the S&P? Right there. 45. And let me try something really quick. It's got to be close to the 618 retracement. It is 45.10, 45.15. So it'd be 45.15. Is that what we wrote down yesterday? Is it? Is it? Is it? It is. That is. So, hey, look, your bias chart. Oh, this is bullish. I doubt it changed much. I mean, it changed, a few things changed, but there you go. Bias chart's finished. All right, Stel, it's all yours. I know you can take a screenshot.
I've already done it and I've already posted it, man. Come on.
You were on it.
Ooh, all right. He's super fast.
I'm gonna figure out how to get you guys before the holidays. I'm gonna get you Rudolph the Red-Nosed Reindeer. I got to figure out how to digitally get that to you and your. Put it on a.
Just give us the complete title. Pirating is an easy thing to do.
That's true.
Oh, all right. I'll have to do it. So you guys got to show your kids. They're gonna love it. All right. I'm out of here.
Okay, Blake.
Bye-bye, mate.
Thank you.
Silver and gold. So Raj, come on. He says, Blake, singing cannot be your second profession. You should hear me when we're drunk doing karaoke. I am so freaking good. When I've been drinking in a bar, singing karaoke, after about 3 or 4 pitchers, you will think I'm good too. All right. Talk to you later.
It reminds me of the, girl and how beautiful they are analogy with alcohol. Anyhow,
Yeah.
So what were we saying?
Yeah, the follow through after the numbers, well, the movement after the number is kind of as expected. So risk is being bid. Yields are dropping a little bit. So 10-year US at 130 again. Bond is rallying a bit. Nothing stellar either way.
Yeah, we're now seeing some retracements of the post-inflation data move. Let's see if it's temporary, and we continue on our merry way as we started before. But the DXY has already retraced like half of its losses. And having to do with stocks, since you mentioned it, they've now turned more or less to unchanged on the day. We're like literally flat as we speak in the S&P. Nasdaq is still slightly positive. Still nothing spectacular to write home about.
I think one of the strongest instruments at the moment is still oil. We had, if you guys recall, yesterday, was it yesterday or the day before, the Saudis announced that they're going to drop their prices to Asia. Now we had the Chinese who said that they're going to be releasing 7 and a bit million barrels from their reserves, and oil doesn't seem to care and just keeps going up.
It doesn't.
Which kind of makes sense, commodities in general are being bid, so
they've exploded higher.
It's going to be hard to see oil dropping with everything else hitting, 10-year highs and more. So.
Indeed, crude oil is actually breaking higher. We talked about it yesterday. It's breaking higher from this corrective channel, and it is very, very hard looking at this chart, looking at the move lower and the way it unfolded. It's very hard for me not to trust this as a bullish breakout.
Yeah, I agree 100%.
So most likely we're on our way to new highs. I don't know how fast we're going to do it, but that's how it looks at the moment.
Yep. Otherwise, cryptos are coming back up, but really with put in context their daily volatility, it's nothing huge.
We might still be within some kind of a corrective move following the prior dump lower. So I still think there is a chance that we're not done moving to the downside. There is a good chance that we might have at least one more leg lower. Yesterday's flank with the Litecoin news and whatever happened turned the market lower. Today it seems to be ignoring what happened yesterday, but with cryptos, I mean, 1 hour it can be like this, and the next hour it can be, the mood might be totally different. So who knows?
Yeah, indeed.
What else?
Not much, really.
Okay, so listen, we've had. Let me take here the 4-hour charts. We've had these moves in the dollar getting bid, but in all honesty, the vast majority of the instruments I'm looking at, I don't really see anything that's really bullish the dollar yet. I would have to say quite the opposite. Here is a 4-hour look at the Aussie USD, for example. Here is a 4-hour look of the Kiwi. Look at the channel. Look at the recent price action, which is quite a nice symmetrical triangle. There it is. There we go. Bottom line, the vast majority of the things I'm looking at are telling me that the dollar wants to move lower, especially against commodity currencies. Here is the USD NOK. We already showed it on the daily chart. This is likely another little rectangle we built, with the previous rectangle's trendline support being resistance and support being roughly there. So let's see if today we're actually going to be breaking lower from it. I know it's still early in the day, and theoretically speaking, we might just reverse higher and close back within it. But if we do close below it, I'm adding more to my position. Here is USD CAD. Admittedly, USD CAD doesn't look that good as USD NOK. So between the two of them, for me, there is no question about which one I would want to be short, right? In any case, another triangle building up here, which, you know, if we break the downside, that's clearly another bearish signal. Now, Blake said about precious metals still remaining weak, and yes, I agree. We've said it again and again. Looking at the short-term chart in precious metals, they still do look weak. Although, as I mentioned again yesterday, if you look at the daily chart, both gold and silver do remain above the broken channels. So even in the short term, I would find it rather tough to be short. Medium to long term, I wouldn't even consider it because for me, it's, you know, fundamentally and technically speaking, it is more than clear where we're headed next as a next big move. I'm not talking about intraday moves or like what happens within a week. So yeah, in any case, I do think that you might be able to make money being short precious metals for the time being. I wouldn't do it, but it is what it is. Now, natural gas is just plainly unstoppable, right? We've now broken through like all meaningful extensions. We've cleanly broken through the multi-year high that we had in November of 2018, and we're now trading at levels that we haven't seen since 2014. And oppositely from what happened back then, I very much doubt that this is a short-term move up there and a short-term spike. Right now, should you be chasing this up here if you have no position? The answer is clearly not, right? Because there is no applicable risk reward that you can say, okay, I'm entering here, I'm going to put my stop loss there, and I'm going to have my target being there. That makes any real sense, right? But I do believe that any real pullback is going to prove once again in being a nice buying opportunity. So I think this is a very strong market that remains in buy the dip mood, and you should definitely respect that. Now, is copper another market that's about to do the same thing and it's somewhat lagging? I wouldn't be surprised if that's the case, right? After such a strong move higher that we've had in copper, the corrective move lower seems to be very orderly. I think that, you know, there is a lot of bullish mood in this market. It's more than clear that some longer term investors don't really want to abandon their positions here, and I think that a strong market that fails to break lower is you know, inevitably eventually going to break higher, and then we're going to see another strong move to the upside. So I think that copper is another market that's going to surprise a lot of people sooner rather than later with how well it's going to be performing. Now, other than that, I haven't seen something really outstanding today. Now, we got inflation data, so there is a chance that we're going to see some delayed follow through later in the day. But admittedly, even if you look at some of the mainstream pairs, like, for example, the Euro USD and the cable, this is a potential corrective move lower in Euro USD. So, you know, we break higher from that. There's a very good chance that, you know, we're going to see more upside. And of course, you know, this being a major component of the DXY, that would immediately mean lower DXY, right? And here's the cable that has already broken out from its corrective channel. And, you know, I know there are some divergences, etc., but I don't think it's easy to ignore this type of a development, because both of them, like in combination especially, are like huge components of the dollar index, right? Now, USD Swiss, somewhat lagging still. Why? Because of Euro Swiss in there. So having said all that, I think we can go over some questions. I forgot to mention, not for any other reason, because there hasn't been any real development since yesterday. S&P hasn't broken down yet, obviously. It's the second consecutive day that we're toying around with the idea of breaking through the ascending wedges trend line support. Obviously, shorting the index right on support makes no sense, right? Especially when we are in such a strong bull market. Now, having said that, if we do break lower, it's going to be very hard for the rest of the assets and the asset classes not to be affected, right? So breaking down here should produce some follow through, should help the DXY hold its ground somewhat, right? Because if we enter risk off mood, it's very hard for some flows not to go back in the dollar, right? So keep that in mind. But absent of a breakdown in the S&P, I really don't see anything threatening the continuation of what we've already seen, right? So the key chart for me, having to do with all asset classes at the moment, is this one, the S&P and its ascending wedge. Okay, Steve, the miners have super fundamentals, but technicals, can they diverge somewhat from the commodity, silver and gold? Yes, they can diverge somewhat from the commodity. They've already been diverging for quite some time, because with gold prices, for example, being where they are at the moment, the GDX being where it is makes no sense. So it's like there is a lot of pessimism in the miners. It's like the stock trading crowd is pricing in much lower gold prices for the future, right? Or much lower silver prices for the future, because SIL doesn't look much differently, right? Personally, I believe that they're completely wrong. And personally, that's why I believe that these type of divergences produce an amazing buying opportunity in these sectors, GDX, GDXJ, SIL, SILJ. You look at them, they don't have all the same formations, but they have the same type of formations, meaning we had impulsive moves higher, we have corrective moves lower, and I do think that it's a matter of time for them to explode to the upside. Here's the SIL, right? And here's the SILJ. There you go. So yeah, good comment, and that's what I think. It is Rosh Sana, assuming this is some kind of a religious celebration, because you say today Sana Tova. Okay, I will actually write that to him. I have no idea what you're celebrating, guys, but good for you. IWM. Let's have a look at IWM. We haven't had a look at it for quite, oh, sorry, not here, for quite some time. So let's see. IWM. Yeah, just a boring chart. Remains a boring chart for the time being, in a prolonged consolidation in what looks like a symmetrical triangle that, of course, favors an eventual break higher, because usually triangles are consolidation formations and usually break in the direction of the prior trend. The direction of the prior trend is more than clear. It is upwards. So yeah, the good thing about this formation and having unfolded for quite such a long period of time is that it makes a break out to the upside or to the downside, as I said, the upside is more likely, probably a very reliable one, right? Because the market has respected these levels for quite some time. For example, if you're looking for a bullish breakout, close to 235 is going to do it. So above 235, this is a bullish breakout. And in my opinion, you see that happening. It's going to be a big mistake thinking that it's a false type of move. I see one of these, I'm going to be rather confident in trusting it, right? For various reasons. So IWM remains in a prolonged consolidation with the medium-term implications, as I said, being bullish until or unless proven otherwise. KRE, not much different from the IWM. Some kind of a prolonged consolidation, in my opinion, eventually breaking higher as well. Now, what happens within this slightly descending channel, nobody knows. I can tell you that we're currently almost exactly in the middle of it. Look how the 50 and the 200 daily moving averages have literally gone horizontal and one on top of the other, which is another mathematical proof that there is absolutely no trend here at the moment. So bottom line, you wish to trade this, personally makes zero sense to me. Do I believe it's going higher or lower? I believe eventually it's going higher. What does it have to do to prove that? To break the trend line resistance. Once it does that, I'm fully on board with you. If you want to be long, it's going to be a nice breakout trade. That's going to produce, at least a very decent follow through. So in my opinion, trend trading and breakout trading in this case is the way to go. The only way I see it makes sense playing this. FSLR. Might be breaking out actually. Quite a solid move yesterday. Although don't forget, I've said many times that this trend line here is arbitrary, right? Completely. The blue one isn't though, right? You can see from how many price points this trend line passes. That's why I said, and look at the trend line resistance in the RSI as well. So this might actually be breaking higher. Yeah, yesterday's candlestick definitely makes a big difference. Yeah, so I guess you can try being long against 99. The risk reward is rather solid. So if I had to do something with it, I would probably be long against 99. URA, yeah. We've talked about it, exploded higher, posted new highs.
I was long that when I got out, I posted it on the chat room at 27.70, something like that. And I want to get back long again. Yes, exactly. 24 something. I'm going to put the order.
This is the first area.
Yes.
That this might find support. But in general,
it's going a lot higher.
Against 17, I think it's going a lot higher. This move higher is super impulsive. So I expect the move lower to be corrective in nature and, finish up with another bullish leg to the upside. So I see nothing wrong with uranium. Corrective moves are, a healthy part of any market. So yeah, keep looking higher, but not exactly right here, right now. Back at 24, I think it's a good idea to start, getting some exposure to the upside as well. Tesla. Let's see. Still within the blue channel. This line is arbitrary. We've talked about it in the past. So not sure. Not sure we found a low or we're still unfolding a bigger corrective move. That's enough for me to keep me in the sidelines, even if I wanted to have exposure here. Judging by the technical picture and the way we've appreciated so far, I would refrain from doing it. As simple as that. So if I had to give it a designation, I would still designate it as a neutral, as a market that I would maintain a neutral bias for the time being. Platinum. If we have inflation data, why the gold is not up? First of all, theoretically speaking, with inflation data being what it is today, gold should be somewhat down. It's just that gold has been acting inversely to real economic reality for quite some time, because investors have really misunderstood economic reality. There is this perverse idea that higher inflation should be negative gold, which is just insane, just because higher inflation will lead the Fed to be tight, and that will lead the dollar to be strong. I mean, I don't even know where to begin to explaining how stupid this train of thought is, and completely disproved by economic history and market data history. So I really don't pay attention to what gold is doing in relation to everyday announcements having to do with data, simply because I've explained my thesis here before, which is the following. No matter what kind of a dream the market is in at the moment, it's a matter of time until this turns into a nightmare, when investors do realize that there is absolutely no intentions from the Fed or any other central bank to be really tight in monetary policy and really change course for the time being. So for me, even technically speaking, gold and silver remain in some kind of a corrective consolidation, and sooner rather than later, we're going to have also the fundamental catalyst for them to start having another big leg higher. And this is the direction I want to be in. I don't care to try to take advantage of the dips to the downside or to the corrective choppy consolidations or the intraday noise. I'm more than happy to see other people do that, because other people are really good in scalping like volatile markets or taking short-term positions. Personally, I'm only looking in one direction for a damn good reason, in my opinion, and I'm not going to change my mind as long as the technical picture is also showing me that the price action to the downside is corrective, right? I have no problem being bearish or bullish, independent of my fundamental bias, because many years ago it was that I completely absorbed the reality, which is that there are long periods of time that the market doesn't simply care about what is happening fundamentally, right? It can't happen forever, but it can happen for a long period of time. And you don't want to be in the wrong side of the market just because you have a fundamental thesis, right? That doesn't prevent me from having one. It just prevents me from taking positions in what I consider to be the wrong direction. So I'd rather be in a market when I consider it to also be in the right direction, fundamentally speaking. It makes me a lot more comfortable sleeping at night, having an open position, than anything else, right? But this is my own personal trading style, and it has to do also with my time horizon. I mean, none of that affects people that want to trade for like half a day, 1 day, 2 days. None of that really matters for you, right? If that's your trading style. In any case, that doesn't prevent me from giving you my personal point of view with whatever use it might have in your case or anybody's case. Platinum. Let's have a look at it. Clearly remains weak, right? You want to talk about weak precious metal markets, this is the one for you. You see how it clearly underperforms gold and silver, right? Breaking to new lows. We talked about it several times during the past few weeks when I said that this recent price action really doesn't look that healthy. Nice rejection from the channel, nice triangle here, nice breakdown. We're now attempting today to break through this confluence of supports at 950, 952, somewhere there, which clearly opens the door for a move towards this channel trendline support and the 61.8 at around 860, right? So, this is another market which I'm very, very bullish if we're talking about a medium to long-term horizon. But, would I be long looking at this technical picture? No, absolutely not. Why would I want to be long at, a bad price, right? I mean, why not get a better price for you to be long? If I had to buy it today, would I be worried holding it? No, I wouldn't. If I wasn't forced to liquidate my position, I wouldn't be worried at all. But why would I want to get it at a worse price than the price I can get it in the future? You know what I mean? I mean, in any case, no matter what type of trading you're doing, your effort should always be in doing the very simple, trying to buy low and sell high, right? So if there are lower prices to come and you look at the chart and you feel like they're coming, why would you want to jump the gun and buy it now? PLTR. Okay, PLTR. Palantir. There you go. Palantir. Has it found a low? There is a decent chance. There is a decent chance it found a low back there at 17. Not a slam dunk case, though. Price action to the upside hasn't been, in any way extraordinary or, impulsive yet. I can tell you that this 2770 area, nice support resistance zone, 38.2 from the high to the low, seems like an important level. So I think above 2770, it's a nice long, with 31 being the next upside target. Support clearly at 25. So anything between 25 and this 2770, probably noise. So yeah, that's what I think. You can buy a breakout from 2770 with a stop loss just below 25. I think that's a good trade. I think that's a good trade. I think that's a good trade. And you might get lucky and getting an acceleration, and then you find yourself, riding a trade that looks like it's about to do a lot better than your initial target, and then you can take advantage of that, trail your stop loss, stay in the position, and look to squeeze a lot more out of it, right? The prior trend higher is your friend because, it gives you the chance of being in a move that's about to unfold to go a lot higher. So yeah, why not? I mean, this has potentially, a lot more upside potential than you can initially plan for. So why not? It looks like a good idea. REGN. Okay, then I'm looking at something wrong because you say you're looking to buy at 850 So I'm probably not looking at the right one then, because this one is like at 620 at the, no, sorry, 640 at the moment. Unless I misunderstood which instrument you're looking to buy at 850, because you wrote that just below REGN. Oh, Palladium. So you're looking to buy Palladium at 850. Let me go back to chart and I'll tell you. 860 is the 61.8, and the channel trend line support, depends on how fast we get there, is anywhere, between like 860 or even a little bit lower. So yeah, in general, it looks like a good area. Of course, you should also consider the way the price action is unfolding towards an objective. So, it's a combination. It's not just a level that you assign in advance. It's also, if the way we're getting there is, is showing you the characteristics you would want to see to feel like the market is stalling, for example, and it's about to resume the upside, right? Now, this REGN is pulling back after producing a new high. So far, I don't see, we drew that some time ago. So far, I'm not really surprised by this pullback. At some point, it would happen. And I don't yet see anything in this pullback that would make me seriously worried about the direction of the stock, right? As long as we trade like above 600, I will treat this as a corrective pullback, right? Now, on the other hand, it might take a little bit more time to unfold. So, if I wanted to buy it, I would still be looking into it on a daily basis and, see when I think there is an opportunity. I won't be buying it yet. INTC, let's see what this is. Yeah. Now, listen, what my problem is here, right? We have a nice big consolidation in this major rectangle, right? We're currently in the middle of it. Yeah, if you look shorter term, you might say that we're attempting to break higher here. But the question then is, break higher towards where? Because looking at this rectangle, we're exactly in the middle of it. So bottom line, to make a long story short, I wouldn't be doing anything with this at the moment. Anything. I wouldn't be short, I wouldn't be long, I wouldn't even be interested in I don't even think we are getting close to the point I would be interested in participating in this market. Yeah. As simple as that. Yeah, I think we covered more or less everything. Great.
Well done, Steve.
So, okay, guys and girls, see you again tomorrow. Have a wonderful rest of the day.
See ya.